Hi, my name is Jeff Hirsch. I'm here at the MoneyShow Toronto with Patrick Ceresna. He's the founder and chief
Derivative Market
Strategist for big picture trading. And you've got a particular philosophy in the market. You sort of start up top, think outside the box. Tell us how that works, how your philosophy works.
Absolutely. So the core is that I like to challenge the status quo of the way investors think. And the bottom line is that everyone comes in telling you what is right or what is wrong, what is good and bad. I don't like people telling me what to think.
Right.
I want to understand.
The world's full of people telling people what to think.
Exactly. I want to understand and make those decisions for myself.
So is this just contrary thinking, contrary investing?
Well, it's just thinking for yourself, right? It's about being an independent thinker to look for where the opportunities are. And so our philosophy is based upon the idea of a top-down approach. We look at macro. We try to understand the big macro backdrop and the cycles and everything that's happening. And then we look at technically when are the major trends manifesting themselves.
Sure.
And then we look for building asymmetry through the use of options as a strategic tool for building that asymmetry.
Give us an example of one of your thinking outside the status quo technical option trades that you're looking at right now, or at least something recent.
Absolutely. Well, I mean, right now we're looking for whether or not there's going to be a bottoming cycle in the energies. I mean, the one thing you can tell is that there's a huge negative sentiment toward the group, and a lot of people.
You mean the stocks,
the
companies
themselves?
Because oil's up right now.
Well, that's certainly, but that's a
little event.
Over in Saudi Arabia,
the Arabian Peninsula over there.
Yeah, absolutely. But that's interesting because a lot of the energy companies jumped on that. The question is that a new trend, or is that just a reaction to the news? And that's something that I'm looking forward to. And the beautiful part is that we can use options to test out whether or not this is a start point of a new energy trend, and then be able to manage those risks.
You mean looking at what's going on in the options market around the individual stocks?
Absolutely.
Or the big ETFs, or all of it?
We do all of it. We're top down. So we start off with, we look at the oil markets, so look at the futures on the oil. Then we're going to go.
So not just options on stocks, on the oil stocks, but futures, the oil futures.
Oh, absolutely.
So just specifically right here, I mean, we've had a pop in oil because of the attack on the Saudi station over there. What would you be looking for? I mean, this is, from my research, seasonally, oil is supposed to be topping out now and run into the December lows.
Right.
Oil and oil stocks, and December, February, we see a bottom in crude generally. So what's something that you'd be looking for in the options indications to show you that typical seasonal downdraft might be occurring or not? It
would be more in the technicals, not in the options. The options are simply just an implementation tool that for putting on the trade. But I mean, from a seasonality perspective, you're absolutely right. One of the things, if this attack in Saudi Arabia didn't happen, we would still actually be looking for continued deterioration in the space. The fact that this triggered something and is a really interesting moment to see whether or not this changes this phase that we're in the cycle. Normally, many times these energy companies will have pullbacks that will even last 8-9 months in duration, and so the fact that we're like 5-6 months into a pullback and then have this pop, it's a big question asking whether this is the turn point. One way or another, I believe that these energy stocks are incredibly cheap, and identifying when the turn point is going to be an incredibly profitable endeavor, and that's what we're going to be.
So you're not ready to go long the energy stocks, and not ready to go short crude right now yet?
Well, we're actually long a number of energy companies, but we're hedged, and so we're using the options as a timing mechanism. If we found out we're too early in the cycle and they go lower, we're going to use the options as an exit strategy and reposition ourselves at more favorable prices. So we're being very tactical about the way we're approaching it.
Excellent. So watch out for those energy technicals. Thanks, everyone. Thanks, Patrick.
No problem. Cheers.
Cheers.